Good afternoon, traders, and welcome to this week's weekly market analysis, Monday, the 24th of July. As always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's kick off and let's have a bit of a look at what's happened, talk about what's happening this week and where the market may go before we analyze each of the major charts for the week. At any stage, if you do have any questions, please feel free to type them in. As I see them, I will try and address them as best that I can. Okay, so last week we saw essentially one big pattern throughout the market, and it was really dollar weakness, that is US dollar weakness. Pretty much it was a week where many currencies hit highs that they had not hit for a long time. Aussie dollar hit a 2-year high, Euro hit about 18-month or 20-month high. Kiwi dollar is very, very close to also a high, and pretty much it all came on the back of US dollar weakness, and really just data that there's not really supporting, well, let's say soft data, wasn't supporting the views that there perhaps may be more interest rate increases on the way for the US dollar. I guess this week, specifically, if we focus on the week that's coming for the US dollar, we do have a monetary policy announcement. It is widely expected. I believe most analysts think or are of the opinion there will be no interest rate increase this week. What is more important that we should note from this meeting and the statement that is due to come out is just to see what kind of indication they give us. If they continue to say things like that the economy is in good health and they're positive sort of views, it could be enough to give the dollar bulls an opportunity to jump back in the market and basically stop the bleeding from the US dollar and have somewhat of a correction in the market. It appears, at least from a technical point of view, that a lot of the other currencies are overbought from a technical stance, that is, of course. All right, so we should be aware of that. Also, this particular week, from the euro, there's no major announcements that are due. However, the German investor confidence number is probably the key thing. It's secondary. It's not. I haven't got it listed here. It would be secondary news, but it basically give us some indication as to sort of where everything is. The ECB basically is encouraged by the performance of the economy, and they're not really too concerned about the rise of the euro in terms of interest rate. And Mr. Draghi did say last week that tapering was not discussed in this month's meetings, and he didn't say whether it will be discussed in next month's meeting. This pretty much left a bit of a surprise element to the market, and essentially the euro just kept on rising. It's shot through those highs now. Everybody's looking at the 118 levels and possibly towards the 120 levels. Of course, a lot of that will depend on US sort of numbers this week and a recovery and what the FOMC statement looks like. From an Aussie dollar point of view, we hit 2-year highs. We came within a whisker of the 80 level. This week it's critical. Our inflation report and CPI numbers will be critical to see if we go back and test it. Now it's important to note that we got very, very close to the 80 level, and then immediately shot back down to just under 79. That movement was largely profit taking. Lots and lots of people who were sort of heading or aiming towards that level felt there could be some kind of resistance, so they're basically selling out, and it's self-fulfilling. Okay, so that's what's happened there. CAD dollar has been on pretty much a relentless uptrend since pretty much when the Bank of Canada started to talk about interest rates. Of course, they did raise them once, and that combined with a dollar weakness has seen the US CAD drop to significant levels. And when I come up to that chart, we'll have a look. We are approaching a very, very key 125 level, which appears to be which could prove to be supportive. All right, so let me go through this week what's happening. I guess let's put our focus on the Aussie dollar. We have CPI numbers on Wednesday, and also Governor Lowe will be speaking on the same day. So that is important news for our Aussie dollar. The US has got a lot of data this week. I think the key and the highlight of it all is essentially the FOMC statement, which is over here. Okay, so keep focus on that one. Let's see what they say. We don't really think they're going to increase rates, but you never know. Okay, there is a small percentage chance of that. If I focus over to Canada, and now notice that I've got the oil inventories, even though it's US dollar, it's US marked news, but it really affects the Canadian dollar more than anything, and also GDP numbers. That's pretty much the focus. There is the one solitary GDP news coming from the UK on Wednesday as well, but I think the currency to look out for this particular week, or the one that's going to be affected the most by data, is going to be our own Aussie dollar. Okay, so 80 level is a critical, it's a big mind level as well with everybody else, so there's naturally going to be it's a level where the currency does not want to stay there. It'll either shoot straight through or bounce again, so keep an eye out on that. Alright, before I move on to my individual charts, quick little update on our trading challenge. We triggered 2 trades, 3 trades actually. Let me show you. I got stopped out of 2. So there's 2 methods that I'm running, a straight 2 to 1 and the other method where at 1 to 1 I collect half and move to break even. On the 2 to 1 method we're up 1,000. Okay, the 2 trades that just got triggered was the Kiwi dollar and the Euro USD. That both got stopped out. The Euro Yen is still in play on this method. If I focus to method 2, the method 2, again, 2 stop outs there on the Kiwi and the Euro. The Euro Yen, however, hit T1, so collected half a target, and actually just between in the last hour or so, I've been stopped out on my second target. So my second target makes a 0, so I have to update that. That's only happened just now, so and basically puts me in at 1375. Now, one important thing that I was just thinking just for myself as I was going through my trading journal this afternoon, the last couple of times that I've run trading challenges, I've never been in a challenge during a period of heavy trend. Okay, and we can definitely define this period right now, specifically with the US dollar going into heavy US dollar weakness, and so a lot of things have trended, like have been in trend. Euro USD has been trending up, Aussie dollar been trending up, Kiwi dollar up, US yen down, and things of that nature. You got to remember that what we're trying to do here is the predominant method that I'm using is price action, and I'm specifically looking for reversal points. So a lot of these trades have been on resistance levels that have stopped me out, and I'm actually pleasantly surprised with the results. I thought in theory I should be doing worse than what we are, so price action has been protecting me to a large degree. It's taken you can see it's this challenge has gone on for a little bit longer than normal, and it's predominantly because we've been in trend, and perhaps the method is working. I never thought about it up until today really. It tends to possibly trigger more trades and work better when we have a range in market, but it's still done well for us, or well enough. In the trend trades, I haven't had as many setups, so it's been unfortunate for that. Okay, so there you go. That's a little bit of a side note. Let me bring my charts forward and see what we have. Comment from Alan is saying that the T-Chase has been doing really, really well. Yes, the T-Chase is specifically a strategy which is designed to catch trends, and when you catch them, you really, really clean up. So the one surprising thing is that our price action methods hasn't left us in the hole. Okay, so we're still moving forward, and that's very, very pleasant to see. All right, here we go. Aussie dollar. Now, we saw the Aussie dollar last week touch that 80 level. That's what I was talking about, and then immediately shoot back down, predominantly from profit taking from all the people who are long. When I look at this chart right now, let me just zoom out a little bit. I've still got this blue line. I'm keeping it there. Now, why have I got that line across my chart? Let me see why. Okay, so this is what I'm talking about. So I drew that line based on that high there, thinking that possibly we could shoot back down over there. And as a consequence, when we got there, essentially there was no price action to support such a trade. So we just stood on the sidelines and just watched it shoot straight through. Okay, does that make sense to everybody? This is what I'm specifically talking about. So, when the market's ranging, 7 or times out of 10, this level will hold and actually will shoot down, and it will actually give you an entry, which allows us to pick up many, many more trades. So this is why one of the reasons that we haven't been able to pull as many trades as normal. Let me delete that. From this level now, look, I'm just going to draw a level here. It's purely based just for me to remember. And I'm drawing a line on the 80. There is technically no real resistance there. If I move into a weekly chart or something, you can see that if I was to extend this line here, there's nothing there. I'm just drawing it purely because psychologically I know that a lot of people will be affected by it, and I just want to be looking at it. Now, one thing that I want to specifically mention on this example, at the moment, let me talk to you. I'm going to just show something that's a little bit more advanced than what I normally do, but it's just popped into my head, so let's just talk about it. Give me 1 second. I need to bring forward my sentiment trader. Okay, it's popping up somewhere. Here it is. Okay, I'm using the MT4 Supreme Sentiment Trader. Okay, now what the sentiment trader is, it'll give you an idea of the percentage of all open positions, okay, of who's long and who's short in the market. At the moment, if you look in here, it says that 26%, so this is 26% of people are long, okay? So what does this mean? It means most of the people in the market are short. This is the Aussie dollar. Okay, that's it. That's all I wanted to see. That I don't need it anymore. Let me get rid of it. So it says most people are short. Okay, so and this journey has started from quite a while ago. So this run has really started from about 74. All right, there's actually many people who are very, very close to margin trouble. Okay, who their accounts are bleeding quite heavily. Most people need this to go down to get their accounts back into order or for them to make profit. So if as their accounts start to blow up, for the lack of a better word, all right, I'm trying to explain something that is quite complex here, so if you don't follow me, that's okay. Maybe next time you'll understand it a bit better. If you haven't been trading for at least about 12 months, you may not follow, but for those who have, you'll appreciate the value here. If they're getting themselves into margin trouble, or even if they're not, a lot of these people will psychologically have their stops placed just on the other side of 80. Okay, so there's a lot of stops building up in this region. Okay, now. So this is because, and we know that there's a lot because I've just shown you that about 75% of people are short in the market. So to protect their positions, they have to place their stop. So their stop has to be somewhere higher than where the current market is. Do we all agree with that concept? Yes or no? Okay, so it's clear. Everybody agrees with that concept. So we know where they're placing their stops. The 80 level is psychological. All right. So what could happen is we could see some big players, and when I say big players, I'm talking about like hedge funds, just big banks. Some big players basically come in and really push the price up, start to buy heavily. And as soon as they start to trickle into these stops are all instructions to do what, guys? These stops are instructions to buy or to sell. Okay, I'm getting I'm getting a 50-50. The stops are instructions to buy. Okay, because if you're short, that means you already sold. So that means to get out of your position, you have to buy back. All right. So if all of a sudden we get a lot of push buying up and then we start to hit these stops are more instructions to buy. So what happens to the price? It pushes even further. Okay. So I actually traded this myself personally on the Aussie Kiwi dollar last week. Okay, and the psychology is this. So as soon as these stops start to trigger, this number starts to drop. All right. Why? Because those people are now no longer in the market. All right. So when you see this number start to get closer to a 50-50 split and the price is driven through and knocked everybody out, that's now I'm not this is a mind trade. This is just basically reacting on the psychology of the market. When you start to see the changeover here and the price shoots through, and I would think it would have to shoot through to about 80-30 at least. Okay, if it did that, a lot of these people would be wiped out. This number would settle in, and then basically you can attempt to take the big trade down, or at least the market will become neutral again, and attempt to take a trade. All right. So what I'm telling you right now is just a psychology of what does occur in the market, of how it's driven. If you have not understood this, that's okay. Don't worry. You will further along the line. You just haven't been around trading long enough. So let's forget about everything that I said just now. And if I was going to trade the Aussie dollar, the best probability trade that I could find would be let it come down a little bit more, look for a nice price action entry, and attempt to buy into the trend one more time. Okay, so this is the trade that I would be looking for. This is the price action trend trade. It's the highest probability. Other than that, there is nothing else on the market. Sorry, on this chart. Let me move on. Euro USD. Okay, so why have I got this line on my chart? Let me see, why have I got it? Aha, I've got it from here. Okay, so this is the trade that we got stopped out on. You can see that I had a really nice entry over here. The market shot down, triggered me in, and then shot up and stopped me out. Okay, so let me just get rid of this line now. I'm just going to step into a weekly chart just to draw the line. Oh, do I really want to go again? Okay, sorry, let me just get rid of that. Okay, I'm at that level again. I'm going back to my daily now. If you zoom out, you can see that I'm picking up this point there, and we're at the same level again. So what do they say? Once bitten, twice shy. Trade what you see. Okay, so here's what I will do. Right now, there is no setup. I can see that there's no setup. However, if I do see a setup again, I will go one more time. I don't mind. I don't care. So, but I need to see a setup. There is no setup there. So what I'm waiting for is, it looks like today's candle's already got a higher high. Let me just check. 1683.7. Yes. this today's candle's got a higher high, which basically means, let's say that we end up with a candle that looks something like this today, and then if tomorrow we get a candle that looks like that, then the next day I can take the trade in this direction. Question Marcio's asking, would it be a double bottom, triple bottom type trade? Um, Look, technically, if it's a double bottom, or well, in this case, it'd be a double top. If it's a double top, traditionally, like a proper double top, should look something like this. So let's say we go to one level there. So the market could have done this, and technically, it should go back with nothing in between. Okay. Now this one, it's got lots of things in between, so it's not really a double top. However, it still is a resistance point, and we're keen to see if we can possibly trigger a trade off this level. Okay? So right now, at the current level that we are, we can attempt to trade off that level if it gives us a sign. If not, we wait for it to pull back. We look for the setup there, and then we drive again. Okay? It's the only thing that if you have a look at every time it's driven through, like in this area here, unfortunately we didn't get setups. We got one there, but we didn't get the other two, which is unfortunate because they were all really, really good trades. Okay. All right, so that's our Euro USD. Let's move along and let's have a look at the GBP USD. Okay, GBP USD. Last week we entered a trade. It was a breakout trade based on this candle, and you can see I'm still in the trade. I took a lower risk trade. This was not part of the trading challenge because it wasn't the type of trade that I said I would do for the challenge. So, but I did take a trade. Now today, in today's daily call, I did call out. Let me just zoom in a bit more so we can see it. I said here we have an inside candle inside of a trend in this, which would be something like that. So did everybody see that? Did everybody see that setup in today's daily call? Yep, we did. Fantastic. Okay, so the question now is, I still have a position, which is my stop is there based on a breakout trade. Okay, and it's based on this area here breaking through. I can see that this level is just broken, so I'm going to enter another position now. Okay, this will be a trading challenge trade. This one, the one that's existing, no, but well, we did that one last week, but this one will be. So I'm going to enter this one. Now, technically, my stop for this trade should be here. Okay, that's the way that it works. So I've got an option. I could grab this one, and push it up there if I wanted to. Okay, for my last week's trade, and if I get stopped out, basically I'll get stopped out on both trades, or you can just leave the existing stop at the level that you want it to be at, okay, and that it was originally set at. All right, now I remember that I took a $100 risk on that particular trade, so I'm okay with that. So I'm not going to move my stop on this one, so that trade is independent to the one that I'm just about to take now. All right, but here we go. Let me just, there's a few questions that just come through. Let me take this trade and then I will answer those questions. Where's my mini terminal here? Okay, I'm just going to jump in at market because it's already triggered. My stop is going to be 90. Okay, so I hit the little yellow button. I'm buying. I'm going to take a fixed cash risk and I want to risk $250 on it. My stop, I said, is 90. And I'm going to put a target of 2 to 1. Of course, at 1 to 1, I will close half for one method and then the other, as I've already explained. So this is 180. Yes, that's correct. And here we go. Let's jump in. Okay, I'm in. Where's my second target? So the trade that I've just placed is I've entered right here. There's the stop, and there's T2. Okay. And when I get to T1, T1 looks to me like it's going to be there underneath that, which I'm happy about. Well, then that'll satisfy T1. And if I have a look, what have I got? So it's a 0. It's turned out to be 0.22 to satisfy those parameters. Okay. All right. Let me tackle some of these questions. Give me one moment. Okay. Question on the sentiment trader. Does it apply to all charts or only the ones that select? You can choose whichever currency pair you want, Miles. There's when you bring it up, you have to drop it on one chart for it to work, but you can change it to whichever currency you want. Second question, would I consider looking into a lower time frame for a possible entry? That question relates to which currency does that question relate to? Was that the Euro USD? Okay, look, possibly a 4 hour if I really, really wanted to get into the trade. Okay, being short on the euro is something that I don't really, really, really want to do after having been stopped out on it. So I'm just going to stick to a daily. If I get an entry on the daily, I will take it, but I won't drop into a 4 hour. Can I do it? Sometimes I do it. You should specify that in your trading rules if it's something that you're going to be doing. Okay. A couple more questions. I thought your entry should be between 5 to 10 pips past the previous candle. Watch the video. I normally enter about when I break by about 2 to 3. Okay, 5 to 10 is my stop, but my entry's usually about 2 to 3. But it's up to yourself. So if you want 5 to 10, just specify it in your trading rules. Question, am I using fractals? Yes, they're on my chart. There is an inside candle on the 4 hour. Okay, great. If you want to take it, take it. So you're referring to the Euro USD. So someone is saying right now there is an inside candle. But look, my instincts are pretty good. Look, have we broken the top of it, which would cancel you out? Let me just check. The high is 1674.8. Oh, it's got exactly the same height. So yeah, look, I'm not going to take that. All right. So, but anyway, for those that want to. All right. So a couple more questions. I just got bombarded with a whole bunch of questions. One moment. Where does the sentiment data come from? Basically, it's a conglomerate of quite a few brokers. So it's obviously it's not the whole market. No one has the data for the whole market because there is no centralized exchange. But as far as we're concerned, it's an accurate reflection of where the market's at. Please explain, how do you determine T1? Oh, okay. Ooh. Oh. Go and watch the price action videos. I don't have the time to go into the super intricacies of it. Sorry, Robert, but very, very quickly, from where I enter to where I place my stop, this distance equals this distance, and that will be where T1 is. Okay, I'll go through it in quite a lot of detail. So, but there you have it. All right, next question. Euro AUD. I'm not looking at the Euro AUD. Arafat, maybe when I finish, if I have some time, I will look at it. Okay? All right, moving along. US yen. I think I've tackled every question. US yen, US yen. Let me just zoom out a little bit. Okay. All right, I really like this level here now. I'm really, really liking this level. So I'm going to wait for the market to come to me, and I'm going to look for a push off at this level. If I get it, that would be a legitimate trade. All right, this one's pretty straightforward. There's nothing else that I'm interested other than this particular trade that I'm looking for right here. I'll move along. Euro yen. Let me zoom out a little bit. Okay. We're in on this trade. Where's my trade? Where'd my trade go? Oh, okay, I see, because I'm trading on two accounts. On this account, I'm doing the T1 method. So the trade that we took was these sets of inside candles right there. The stop was just here, and we hit T1 over there. It's come back and stopped me out for zero in the second half of the trade. That's why it's not showing a trade. So on the T2 method, I'm still in on this trade. And right now there's nothing showing, so I can't do nothing on this particular setup right now. Right, Kiwi dollar. This was the other trade that we got stopped out. There's that level, and I believe, let me zoom in so we can all see it. The trade that we took was this here. 3 inside candles in a row. Shot down, did not reach our first target, and then obviously there you can see that we got stopped out, so we're out of this. So why have I got this blue line now? Let me just zoom out a little bit and go into a weekly chart to have a look. Aha, okay, so let me get rid of this. Can everybody, I'm on a weekly chart. I'm only using the chart just to get the levels. Okay, so I've got that level there and I've marked it out over here. So if I go back, okay, so if I get something here in this direction, I will trade it. Okay, so at the moment, if today's candle finishes like it is right now, it would actually give me an inside candle situation, which would mean I can trade the break tomorrow. Okay, so put this one on your hot list to look at. We could get a setup tomorrow on this one as well. All right, so there you have it, Kiwi dollar. US CAD. Okay, I marked out this level last week, and you can see where I've picked it up from over here, but nothing really happened. So let me get rid of it. And now we are approaching a big psychological level. US CAD's been on a massive drop down. There's a key level here, and it also happens at the 125, which is a half decade number, which again is a psychological psychological level. The same principles that I explained on the Aussie dollar could apply here in reverse. Okay, so what I'm going to do here, we are at a key level. I will look for some kind of price action here, and if I get it, I'd be happy to take a long on this based off that possible resistance and with price action confirmation. Okay, US CAD. Gold. Oh, we're in the middle of such nice trending, like such nice smooth lines. I really like it, but we're right in the middle, which means I can't do nothing. I drew this line hoping that the market would come to me, and it bounced before it got there. So give me a sec. I'm trying to see something here. Nothing, guys. I've got nothing for you on gold. So this week, gold, nothing. WTI, oil. Okay, I said I wanted to wait till we hit here before I would attempt it, so we've come close. Let's keep waiting. I do not want to trade it where we are right now, so let's wait for it to come to us, and then we'll see if we can pull a trade on this one. Okay. All right, there you have it. Let me just go back and quickly summarize everything. If you have any questions, please type it in. If you want me to look at something, let me know, and I will go ahead and do so. All right, here we go. Aussie dollar. We are approaching the 80 level again, massive psychological level. I explained the sentiment of the market of it, but there's really nothing there, so we've got to wait for a pullback if we get it, and then trade on the way up. Euro USD, we are at a pretty important level right now, so let's see if we get some kind of price action. Today's candle's already got is higher than yesterday, so this one, the earliest that it could happen would be by Thursday morning. GBP USD, we just entered a trade, a trend trade. There's our entry level where my arrow is, stop, and my T2 target, and I'm still holding a trade from last week, which was a breakout trade, and I chose not to move my stop, but if you want to move it, you could possibly move it to the same entry as what we've taken today. US yen, it's a nice looking chart. We're waiting for it to come to us on this level. Euro yen is a nothing chart this week. Kiwi dollar, we could have an inside candle tomorrow at a critical level. US CAD the same, but in reverse. We are approaching or very, very close to a critical level. Let's see if we can get something. Gold, we have nothing. Oil, we're waiting to reach the perimeters. Okay, a few questions are coming in. Let me see. The sentiment traders made up of traders with the brokerages of Australia or worldwide? Worldwide, Miles. Admiral Markets has clients all over the world. All right, we are a global company, so even if we gave you the sentiment of our own clients, it's already worldwide. All right. Second question. What was that symbol for the market long? Oh, okay, yeah. All right, let me show it to you guys. So it's this one here. It's called the sentiment trader. So you have to have your MT4 Supreme installed onto your platform. If you don't know how to do it, contact your account manager who's helped you set up your account with us, and they will help you. Okay, so then all I do is I drag and drop it on a chart. Doesn't matter what chart it is. Little window pops up. It looks like this. You click OK, and a window will pop up. And then if you click on symbols here, you can go through and whatever charts you have open, see all my charts that I have open down here will be listed in here. So if I want to look at something else, I just have to open another chart and it will be listed in this. And now let's say I wanted to see what was the sentiment of the US CAD. There's the US CAD. I click on it, and at the moment 82% of people are long US CAD, which is it's the reverse of what I explained before on the Aussie dollar. All right. Another question. If the Aussie US touches 80 level because of the CPI news on Wednesday, so what's the question? So I think I understand what the question. Okay, let me look at a chart. Give me 1 second. Okay, we have CPI news coming out, which could push the Aussie dollar to that level. So if we get there and you get a setup to come back down, technically there is no real resistance there. It's all psychological. Okay. So that line that I've drawn there, I should maybe rub it out because it's not a real line. I've just drawn it just to remind me where it is. So, but there's no history of resistance or support. So really the only trade that I would trade on a technical basis here is if we come down, we get a setup, and then we go long. Okay, hope that helps, Rav. Euro USD, it looks like you have an extra candle. Could you please show your chart again? There's my chart. So another question, is Admiral Markets looking at adding cryptocurrencies like Bitcoin? Alex, we already have them. Okay, we allow you to trade Bitcoin, Litecoin. Oh, what are they? Let me see. Let me just check. If right click and show all, scroll right down to the bottom. Here they are. So Bitcoin, there's Bitcoin, Ethereum, Ethereum, and Litecoin. Okay, at the moment we only allow you to go long only on the coins, and the reason for that is basically Admiral Markets. We execute the trade. We need When you take the trade, we're actually going straight to the exchange to hedge off, which means we can't sell at the exchange. So we're only allowing you at the moment to go long. We are looking at finding other liquidity providers that will give us the opportunity to let you short as well. But at the moment, we do allow you to trade it. Okay. If you want to look at the terms and conditions, just go on our website, and there are more regulations because it's a highly volatile instrument. Okay. Any other questions, guys? It's a very active group today. It's good. It keeps me awake. It makes it more fun for myself. Someone asked me about the Euro Aussie right a little while ago. Let me just quickly look at it. Euro Aussie. There's my Euro Aussie chart. Let me just zoom out a little bit. It's very, very close to a channel, but it's not quite a channel. It's just gone a bit too far down here. So if I was going to be trading this, I would be looking for a price action trade to continue the trend down. Thank you for your comments, Miles. Appreciate it. Do we have any other questions, guys? While you have me here. I'll just have a quick look at our index, the ASX 200. Geez, this is a tight compressing market. When you see a market like this, so if you're an active trader, if you step down some time zones like a 4 hour, you'll usually find lots of opportunities. Okay, you're just trying to pick off tops and bottoms and trying to trade up and down until it basically just breaks out of that region. So yeah, nothing happening here on the ASX right now. Alright, if I've exhausted all the questions for today, we'll call it a day. This recording usually takes me about an hour to get it up on the site, so you can go back and review it. If you do have any trading questions, just email us on the education inbox, and they all end up in front of me. I'll answer it and I'll respond. Okay. Other than that, have a great trading week. For those of you who watch the daily call, I will speak to you tomorrow. Otherwise, I'll speak to you next week. Bye for now.